This session, we're going to be dealing with planned giving, which is becoming very popular in society today. Our objectives: describe the planned giving method of gifting to a charity by an individual or foundation. Describe the loss of part of the charitable gifting tax deduction for taxpayers who earn over a threshold. Discuss the increase in charitable gifting that can be credited in part to planning giving methods. And explain the tax advantages of private foundations who use planned gifting. Planned giving is an industry term for plans that leave assets to a nonprofit at death or donor receive benefits during lifetime and request remaining funds at death. It has detailed and complex programs of instructions that can be tailored for each client, and charities have professionals able to assist the establishment and maintenance of the program for the financial planner and the client. In other words, things that you would have to do as a financial planner for your client can be delegated to planned gifting. There is a cap on itemized deductions, which we must consider, and it applies for those who the government considers wealthy, and it's 3% of the excess deductions over the threshold is lost. However, maximum loss is 80% of the total deductions, excluding exempt deductions, medical care, investment interest, casualties, and wager loss. This again affects your income tax returns for people who itemize, and of course if you don't itemize, you don't get a charitable deductions. So when you itemize, you got to be concerned with this 3% for what they call wealthy. It's indexed by year, but I would suspect most of your clients are subject to it, which means they're not going to get the full credit for their charitable gifting they give by 3%. And some people that's important, some it isn't. It's a tremendous growth in charitable gifting over the years is due to these planned gifting programs. They're very aggressively pushed, and currently over 1.5 million qualified charities and 300 religious organizations are available for clients to choose. And the nice thing is they've gone through, these are all IRS qualified, and therefore gives you a lot of flexibility without having to do a lot of due diligence. The assistance for financial planners: you can get your clients involved in planned gifting will receive help from what's called plannedgiving.com, which is a fantastic organization. It is relatively new compared to a lot of things we see in the charitable area, and probably a little bit more energetic from what I've been able to find out by dealing with them. Getting the client on board: generally the concept must be sold to the client, showing the social and tax benefits of gifting this way. Charities provide brochures about planned gifting that can be imprinted with your name on it, your photo, and information about your practice, which means you can use it as a marketing tool. You can also obtain newsletter material from charities for your client about using planned gifting, which is, again, lifetime and at death. The benefits for the planner: planner gets a percentage of the assets donated for the time and effort. Studies show that planners involved in charitable gifting are considered more trustworthy by the general public, and the planner obtains tailored brochures and sometimes sponsorship from banks, lawyers, trusts, and accounting firms who plan to be identified with the planned gifting planners. Who is responsible? The financial planner is ultimately responsible for implementing the planned gifting program for your client. It's something you have to do, and if you don't do it, perhaps the client isn't going to be aware of it, and that becomes your responsibility. In summary, we make it very easy to do charitable gifting by using planned giving because they tell you what charities are qualified. They assist you in working with the charities. You, as a financial planner, are reimbursed. Charitable gifting, as the most part, can be sold. It isn't natural to give gifts this way. People tend to actually prefer what they want to give gifts to. Now we're putting them in a set of what they should do to fall under this, and planners who are involved in charitable work are considered more trustworthy. So you can build up confidence in your practice by using this method.